But time now to put the spotlight on Ashok Leyland. Mr. Shenu Agarwal, the MD and CEO at Ashok Leyland, is joining us on the show to talk to us about their earnings. Hi, Mr. Agarwal. Good morning. Thanks so much for making time and speaking with us. Well, over the last 3 to 4 months, MHCV volumes have seen a consistent decline, with rainfall partially explaining lower sales in the previous months. However, October's numbers continued this trend as well. Could you shed some more light as to what's the reason that we are seeing the weakness in this segment and what's the expectation for way forward?
Okay, so as far as MHCV industry is concerned, in Q1 we saw a very healthy growth of about 10% in MHCV industry. Q2 actually Q2 was a little bit depressed, and we do believe that these reasons are more temporary in nature. One thing, like you rightly said, that the extended rainfall kind of halted construction and infrastructure activities in many parts of the country. Also, we had some extreme weather conditions in the beginning of the quarter or end of quarter one. And also, what we saw was the uptick or the takeoff in the government CAPEX after the general elections was slightly on the slower side. So I think with all this happening, the industry took a dip. Now, as far as October is concerned, we have definitely seen that October industry, although is in degrowth, but the difference is not that high and not as high. Also, if you look at the fundamental factors on the ground, for example, like fleet utilization, which actually got to about 65% levels in Q2, has now again risen up to 90 to 95% level. So that's a great kind of indication for the times to come. Overall, I would say we are very optimistic about the second half of the year. Other than government capex coming back, other than the positive impact of good monsoons happening, other than the fundamental economy doing well, we also have a situation where last year we had a low base in H2. So I think given these factors, we are optimistic about H2.
Right, morning. Now, when it comes to the EV industry growth, the sector's contribution continues to remain rather limited even after 4 to 5 years. So what's your view, or what elements do you think need a stronger push in order to accelerate industry growth? How do you envision Switch actually positioning itself alongside the industry as we're seeing this revolution play out?
We are very happy with the progress that Switch and also our other subsidiary, which is OHM, which is the EMAS subsidiary. We are very happy with Switch and OHM, the way they are progressing. Like we have been saying, we are very confident that Switch India would become EBITDA positive this year. Now, as far as the volumes are concerned, definitely it takes a little bit of a time to deliver the volumes. But if you look at our order book at Switch, which is almost close to 2,000 buses, it's a very strong order book. Uh, so we think that like in times to come over next 12 to 15 months, when we deliver all these 2,000 odd buses, you will see a very healthy top line at Switch as well.
Okay. This quarter also saw a bit of a reduction when it comes to your debt levels. Could you provide an outlook on the debt management going forward, and when might we expect further improvement or reduction in debt then?
Yeah, I mean, we have been very focused on not just profitability, but also generating cash, from our business. I mean, you are right. End of Q1, our net debt was close to 1,300 crores. And now, end of Q2, our net debt is close to 500 crores. We have already told the investors and the analysts at the beginning of the year that our attempt is to become a cash positive company by end of the year. And we are, I think, very well moving in that direction.
Right, and you previously mentioned your plans for value unlocking through listing of your key subsidiaries. So how is this process progressing? Which subsidiary do you think could be prioritized? And can you share some sort of a timeline if you have that in mind?
Yeah, I think we are very close to that happening. At least one of the companies we want to go for listing, and that should happen either in late Q4 or sometime in early Q1 next year. And that would be definitely Hinduja Leyland Finance.
Point taken. But could you also leave us with a bit of an outlook on the defense segment then?
Yeah, on the LCV side also, the company is doing very well. You have seen our results, our volumes. In H1, we have gained considerable market share on LCV. LCV is one area where we believe that we have huge untapped potential. We are only covering about 50% of the LCV market, and the idea is to get to about 80 to 85% of the overall LCV market. This is our business, which is actually more profitable than MHCV business. Although also this is a business where we have been able to clock really good success in only last 10 to 12 years, as we were a late entrant into LCV business. So a lot is happening on the LCV side also. Even this year, when the year started, we said we would be doing about 5 new product launches in LCV. We have actually done the third launch now in Q2. The other two launches would also happen, one in Q3 and one in Q4. So we are trying to build up this business really well. We know that we have opportunities not just in the new products, but also we have opportunities in the existing portfolio that we have. Our overall market share in 2 to 4 ton is close to about 20%. But in several parts of the country, the market share is still in single digits. Yeah, so those are the areas, even in our existing portfolio, we have lot of potential. So we are very focused on LCV, but equally focused on defense, power solutions business, and aftermarket business. All of these businesses are high margin businesses, and therefore we really want to drive these businesses, look at every aspect of the potential, how we can grow these businesses.
All right, going to let you go on that note. Thank you so much for taking time out and joining in and giving us an all-round view as to how business is shaping up and what some of the key highlights.
If you like this video, then like, share and subscribe to ET Now.